Welcome to Closing Time with Jeff West. I am a local realtor in St. Thomas with Right at Home Realty. And today, my guest is the president and co-founder of JAAG Properties. JAAG Properties offers solutions for individuals who might not qualify for a traditional mortgage, like the self-employed, those people that are kind of repairing their credit. And Adam's going to talk about the services that JAAG provides to help people get into home ownership through a rent-to-own program. Welcome, Adam.
Thanks, Jeff. Thanks for having me. Good to see you this morning.
Yeah, you as well. We're twinning today.
Yeah, same color shirt. Perfect JAAG color.
Yeah. There you go. So let's start off. Like, what is JAAG, and how did you get this company started and up and running?
JAAG is our rent-to-own provider. So we only work with rent-to-owns, which means we help people, like Jeff said, that can't get a mortgage today, which could be a variety of reasons. The banks are making it harder and harder for people to actually secure a mortgage. And you need down payments. You need next to perfect credit score. You need a good work history. So if you're changing jobs, changing careers, the banks kind of, put the brakes on you and want to see a couple of years work history. We have people going through divorce, new to the country, anything where your life's kind of, been pulled out from under you, or you're switching things around. The bank just wants you to have that secure employment. So that's what JAAG does. We're looking for those clients. They still have income, so they're still working. They still have some sort of deposit, but they can't afford the home. So that's what JAAG does. We are founded about 13th year now. Just kind of did some online courses. Rich Dad, Poor Dad. It was a big thing back then. So I went to one of those lunch and learns. You heard it on the radio. If you're interested in real estate, come on out. It was at one of the hotels in London. I think it was just like an hour event. They kind of sparked some interest, different avenues of real estate. And then I signed up for the weekend course. Just tried to get some more information. And again, their weekend course was just, a couple hours on flips, buy, rent, holds. Rent to own was one of them. Yeah, just normal rentals, property management. They just touched on a lot of real estate. And rent-to-own kind of stuck to me. It kind of hit home the most. Just that you can still own real estate, but you're helping people. So there's a little bit of a gratitude factor when you're talking to these people, how grateful they are that you were able to offer them an option that they didn't know exist. And I think that's one of the coolest things. I find that it's not well known. So when you are helping people, they're just astonished, amazed that this is actually an option out there, and they never thought they could own a home without this option. That's what I did, and did some courses, and then we just started JAAG and started reaching out to clients, realtors, just kind of promoting and educating really what we do and what it is.
Yeah, it is great, and I going through your website and stuff, I see you've won all kinds of awards. Your success stories are on there for anybody that wants more information. They know how to find you. Can you kind of talk about exactly how it works? Like, take us through the process. Somebody calls you up and says, okay, I like this idea of rent to owning. How does it work? What do I do?
So from the first time they contact us, what we're trying to do is figure out their solution. So we do collect all their income documents, the exact same as if you're applying for a mortgage, because what we have to do is figure out how much you can get a mortgage for at the end of the term. Once we've addressed those issues, how much you can afford. So we're collecting your letter of employment, your pay stub, your NOA, all your tax documents, your ID. And then we're setting up phone calls to get to know the clients. We do like to keep a personal relationship, working relationship with them, because we're there to help. We're not just collecting rent and then give them a mortgage. So we're not a lender. We don't give a mortgage. We have to work with our clients to set them up so they can go back to the banks or credit union or any lender of their choice and get the mortgage. And that lender is of their choice, is of the client's choice. So we collect all their documents. We figure out kind of their budget. And then we let them know that, hey, you're approved for X amount. So that process is similar to the bank, that we know they don't have enough down payment, but we're going to save it. Or we know their credit's not the best, but we have a credit team that's going to work with them to increase the credit score. So we kind of look at the future, if you want to think of it that way. In 3 years, when they have good credit, they have the full down payment, what would the bank approve them for? And that's how we come up with our purchase price. And at that point in time, our clients get to go out with a realtor of their choosing. If they're working with one, they stay with that realtor. And if they're not, then we can recommend realtors that we've worked with in the past. But yeah, we're not realtors. We're not mortgage brokers. We're working with all the real estate professionals. But yeah, so then the client gets to go out and the client chooses their home. So that process is the same. It should be the same. We've always felt it that way. And so it's the client first approach. So the client's looking at one home, 50 homes. Jeff, you know how many? I don't know what the average showing for someone's home. And that's one thing I'm glad I don't do, right? Open all those doors, driving them around. Sometimes it could be the first one. I don't know how, months and months sometimes. So we just tell them, here's your purchase price. Go work with Jeff or whatever realtor and let us know once you find that home. And same thing. It could be one weekend. It could be weeks, months down the road. But once they find it, then we put the offer in with the realtor, with them. We're all doing it together. Kind of figure out what terms and dates and conditions to put in. We always do home inspection. So we then will meet the client at the home with the realtor, the home inspector. We go through the whole home the same way, just to make sure that it's a solid home and that any deficiencies that the client's aware of, the client can fix, is able to fix, has the money to fix. And even if there's no immediate deficiencies, just a heads up. What to look for in a year, 2, 3, 5 years. And we don't just
the furnace is 15 years old and it needs to be replaced.
Could be on this winter, something do you want to take that gamble on? You know it, or keep looking. So we want to set them up for success. We don't want they're excited. Everyone's excited house shopping. Jump on the first one because they've been approved. They want to move in. We want to make sure that this is their home, that if something goes wrong, you're able to, and just so they know what to look for. A lot of them have never owned homes before. Some of them have. So some of them know what to look for, but we're there to help them as their partners through the whole process. Yeah. So once the home inspection's good, we waive conditions and then it's on the move in. Once they're in, so a portion of their monthly rent. So we calculate the monthly rent based on the house. So property tax, mortgage, insurance, if there's any condo fees, and then if they need any additional savings. That's how we calculate our monthly rent. It is technically a rent. So sometimes that could be an extra 200, could be 500, 600. Depends how much more down payment they need to save. For example, some people come to us with 10% down payment. So they don't need it. Where some people come with 3% of the house, so then we need to save. And it depends on, their credit. They might only have to go to 5%. They might have to go to 10%, but we do calculate that in the beginning. And that way they have the full down payment saved for them for the end of the term. So our team working with them, that we have a credit team that works with them quarterly. And then we actually go out to every home, to every client on a quarterly basis. Again, just to keep that conversation going. Yeah, see if anything's come up, anything's changed, if they have more questions. Again, we're there to help them. We're not just there to put them in a home, collect rent. And in 3 years, we're actually there actively working with them as their partner, I always say, to get them to there's a lot of little things going on there, but and then the contracts, I guess a lot of people wonder how it works. So technically, they're tenant. So there's the Ontario tenant in Ontario that we use. And then the second contract is a purchase option contract. And that outlines what's going to be the buyout price. How much was their initial deposit? How much monthly savings are saved for them to build up their down payment? And then it states that, they're responsible for repairs. They're responsible for utilities. It's basically their house. We're holding title as their partner and working with them. But in terms of the home, they're responsible for the home as if it was their home. We want them to have that pride of home ownership since the day they moved in, not just living there, but actively taking care of the property. They pick the home out. They're going to be throwing birthday parties and celebrations and holidays there. We want them to really be able to move in, have that pride of home ownership and start living. So it's a little bit kind of how it works there, but really it's finding those clients that can't get the mortgage, but can afford it. I mean, home prices are higher than they were 5-10 years ago. So the income level has obviously increased with us. Like I said, we're not the lenders. We don't lend money. What we do is we use our credit to hold mortgages today and then work with the client to get the mortgage. So we don't dictate the interest either. We're going by interest rates, what we get from the bank. Purchase prices are the purchase prices. So we got to figure out what that mortgage, the home ownership is still expensive. And that's one thing we can't change. We do get some people coming to us that would like to pay less, right? Or more of a rental rate. But unfortunately, if we're buying the home, here's the cost just to own the home. We need to cover that at least. We're here. Here's your partner, but we're not here to lend out money or lend out money because we need to use that to help as many people as we can. Oh, really? Yeah.
Is there a minimum household income that's required right now for people that are considering this as an option for them?
It's a good question because there is and there isn't. I mean, it depends on where you want to live and what the house prices are. So yeah,
Okay.
we put our website 100,000 combined income. A good rule of thumb is 4 times your annual income. But if you're looking, say like London, Mississauga County, 400 isn't going to buy you any that you can live in. But if you go west, you get into Sarnia, Windsor, and Chatham, there is. You can get in those mid threes at a decent, solid house. If you go east of London, it gets higher. You get in Kitchener, Waterloo, and then GTA. It just depends on where you want to live and what the prices are. We have houses up in Northern Ontario. They're lower too. It depends where you live, where your kids go, where your job is. There, like I said, we throw that out there just to kind of, it's a round number. If you're coming in with 60 combined income, I'd say that's too low. Years ago, like I said, 10 years ago, 15 when we started, you could get a solid home in the London area for $250. So that would have been your approval rate, and it was great. So as the prices go up, people's income isn't going up the same, factor, or even who we can help, is, too, like everyone wants a good home, nice big home, but your income just doesn't match what the bank will approve you for affordability as hard as it is. So we always say reach out. That's a round number, just to kind of get started. We always tell people up front, around 4 times is a good rule of thumb. It depends on your credit, on down payment. There's other little things that could make it a little higher, a little lower, but not too much. People get discouraged once they hear that. When we break it down, that's a lot of what we do during the approval, is the education of, okay, you wanted a $100,000 home, pick a bank. I always say, we go on the bank website, put in 800,000. That's the mortgage. That's how much the monthly mortgage is. And they're surprised, I guess. And then you got to add $500 for property taxes, a couple for insurance, not even getting into utilities, living and food and gas. So, everyone, or they know someone that has that higher price, but they might have bought that 10 years ago. They might have had an inheritance, put a lot of money down. Yeah, we get it where, there's someone from their same company owns a home, has the exact same job, same income, and they want a home just like it on the same street, but they bought it 10 years ago. It's gone up quite a bit more. 10 years ago, you could have bought that home because the price was now. So it is just a lot of talking to people and explaining how it works, how the numbers work. Nothing to do with rent to own, just how mortgages work, how housing works, how house pricing works, before you can even get into it. It's harder and harder for people to afford. But yeah, in terms of income, we always say, 100,000 is kind of like our baseline. But if you're under it a little bit, you're looking west of the London area, let's look at houses, see if you're fine with something. Like I said, I know Chatham has a lot in that 350 in Sarnia. But if you're living there, perfect. If you're not living there, we don't like to move people just to afford a home. We tried that a couple times and it doesn't work. People work and live where they work and live. It's hard to move from east to Toronto over to our area, or people think they can drive a couple hours a day to work, and it doesn't end up working. Winter comes and people get frustrated. They want to be home and adding extra hours. So if you're in those areas that are lower, you're lucky in a way. You already live there, so it's something to explore.
Yeah, and it's an ongoing process with JAAG, helping clients improve their financial situation throughout the 3-year term. Like, do you have your check-ins and stuff? Do you have people work with them, or?
Yeah. So we have a credit team, so they're checking in about quarterly. setting up calls, setting up meetings. So we do what we call is like a roadmap at the beginning. So when we pull the credit to see where they are credit wise, see what debts they have, if they have any, consumer proposal, bankruptcies, and collections, anything that was a blemish on your credit score. We know before we start the term with our client, and then we have action items of what to address and what to pick down first. So our team is checking with them. The good client, there's a lot of people that actively talk to us to address those, and then there's some people they get busy or they just forget. I don't know, or don't reply back, and that's where it gets harder. You can't leave it till the end of the term and then expect to address stuff in a month and get a mortgage. Stuff takes years to even come off your credit report. So the earlier they, be reaching out to our team, addressing those items, it could take years for something to come off that is affecting them to be able to get the mortgage. So the sooner the better. But yeah, we're there to, like I said, partner with them, use our experience, our knowledge, and kind of address those as soon as.
Nice. So when you have a contract with the client for 3 years to purchase the property, I guess I can look at it both ways. What happens if they've improved their credit score, everything's great, and they're ready to purchase the house, but it's year 2?
Yep.
Are they able to purchase the home early?
Yep. So with JAAG, you are. So we've adapted our agreements, obviously, over the years. But that's something we did way back when. Because at first, so we usually set up a 3-year term. You kind of use that. I always use years. It's a typical, gives people enough time to build down payment. But before it was just they could buy out at any time within 3 years. There's no penalty. There's no extra costs. There's no fees. But we have it now adapted to different buyout prices. So we have a 1-year price, a 2-year price, a 3-year price. So if you can, in 2 years, it's less than the 3-year. And we found it should be. Like you don't want to have here's your other rent-to-own providers lock you in for 3 years so you can't get out. So you're lucky for rent-to-own it's not regulated, so there's no standard form like a lot of real estate gone into. The leases, offers, forms. But with rent-to-own, it hasn't been there yet, and we've been working for that. But so some rent-to-own providers, like you were asking, lock you in the 3 years. There's nothing you can do. You have to pay every month for 3 years and then buy out. With JAAG, you can buy out. We had one, it was last year, I think it was 5 months he bought out in.
Wow.
So he needed a quick thing. He was going through some family situations. Just needed a couple months to kind of get it sorted out, but knew what house he wanted. So we were able to work with them. That's the quickest that I can think of. We had a bunch back in 2021, 22 when the market was going up. They were able to buy out early because they could use the equity, which is another thing with our purchase option, that 1, 2, and the 3-year buyout price is set. So when the market went crazy, people were buying out with $200,000 of equity that they got. So they made that in a year or 2. We have our
That's great.
Yeah, we set our numbers. That doesn't change. So it does allow people to make the home their own. But yeah, so there's no penalties. The only caveat, I guess, would be when we set these up, we do a 3-year fixed mortgage. So if you do buy out early, you just have to cover the mortgage cancellation fee. That gets paid directly to the bank. JAAG doesn't collect anything. We don't get an extra or anything. It's the mortgage, and the lawyers kind of figure that out, what that exact amount is. And that can fluctuate. That depends on the rate changes and a lot of factors. It could be, sometimes it's a couple hundred, could be a couple thousand. Yep. But I always say you can buy out a year early and actually untitle for a couple thousand. To me, that's worth it. I can't say what other people, but now you're on it. Don't know what your rate would be. You could save that difference over that extra year. Yeah, that's the thing. So people are allowed to buy out early at any time, at any date, and all those numbers are all on that purchase option contract.
Okay. And then what happens if they're not ready after the 3-year contract is up?
Yeah, so that's another thing that JAAG has done, just to show that we are here to work with the client. We're not here to put you in a home, take your deposit, kick you out, recycle the property like some, they call themselves rent-to-owns, do it. I think they're just more people just trying to fill. So what JAAG has done is actually put in that clause in that purchase option. So as long as you're not in breach, as long as you've made all the payments, you're actually able to extend the term. Similar to you have the mortgage, your term's up the mortgage, the bank's going to send you a letter saying you want 1, 2, 3, 5 years, the rate, what your new monthly payment would be. Let us know,
Nice.
and you just go on. So JAAG's the same way, that if they need more time, and our credit team would know beforehand or at that time, maybe they only need 6 months, maybe they need 2 years. So then you would renew the mortgage to match that new term and kind of rerun the numbers. The rate could be down, it could be up. It depends on the timing. So your payment might go up, might go down, but it just, again, it's reflective of the actual house, the actual rate at that time. And then we discuss the numbers at that point. But yeah, they're able to extend. We've had that in the last couple of years, and just with how the market is. The majority of ones have actually probably extended. I'm seeing it right now, the last couple months, actually, turning that we've seen that people are able to buy out because now the price is there. It's kind of stabilized, gone up a little bit, actually, which is great. Before, yeah, if we bought it, or they started in 2022, so last year, 2025, don't know where it was in terms of the purchase price. So a lot of those people have extended for a year or two just to give them more time.
Yeah.
That's due to the price of the home. But then there's other people, unfortunate clients go through health issues or personal family issues that they have to acquire more debt to get through. And that then affects their ability to get a mortgage. Other factors may affect why they need a year or two. But again, we're there to work with people. We understand life happens. And if we need to another year or two, the whole point of us buying the home is for them to own the home, not for us to own the home and then have to list and sell it. And like that's just a headache for us. We want to be able to buy, work with someone, have them buy it, and us help another family or another person. So if we got to give another two, it's the same as helping another family. It's just setting up a new term. So why wouldn't we?
Yeah.
And that's why we put that clause in that contract, just again to show people up front that there's not a hard deadline of 3 years, buy it or you're out. There's actually a clause here allowing you to extend. Relieve some pressure on them too, I bet. Some anxiety, just so they do know, that they will be owning a home.
Nice. And how do you come up with the future purchase price, especially in this market, because it is difficult?
Yeah, it has been the last couple of years, more unknown, I guess. Or I mean, it's always I know what's a price of a property going to be worth in 3 to 5 years. Yeah, back 15 to 2020, things were pretty stable. You could pretty well, get pretty close to what might be. After COVID, things went down. So there was a drop there. But yeah, it's using a pretty rate, conservative one that's in that area. Has to be conservative because it has to be worth that. You can't set a purchase price and someone can't buy a home more than what it's worth unless they're paying cash. Every lender needs an appraisal. They do their due diligence. So we do need to make that property's worth the amount that we've kind of agreed upon up front. But that purchase price is agreed upon up front. So we have the 1, 2, and the 3 year price. But it also is a price that the client can improve on. So we've had people do additions, renovations, finish the basement and kitchen. So it allows them to add equity, curb appeal. And like I said, a lot of people have bought out and it's worth more than, almost all of them. It's worth more than what we set the price is. And that's what we want to do. We want to set them up, in a good foot. So they're starting out higher than what they're buying it at because they did live there for 3 years. It was their home. They picked it out. They took care of it. They paid for it. And we were just there to assist them. So we just run our numbers, what we need to operate. And everything else the client's able to make equity on.
Yeah. Now, would you say with this current market and values being lower that it would be a good opportunity for people to get into the rent-to-own if they're not able to qualify for a mortgage on their own?
Yeah, like it's different. Like I said, years past, you knew, rates for appreciation was going to jump, 10, 15% per year. You knew the equity, you're going to have a lot of equity at the end of the term with a rent loan. So some people, were doing it based on that. Then other people, like the rent loan's meant for people that want to get out of the rent cycle and, get some stability. Rent going up, people are getting evicted for some reasons, no reasons. There's a lot of talks about rent evictions or landlords moving back in because maybe they can't afford 2, 3 houses, so they've got to downsize and move in, so they pick theirs. So yeah, like we have a lot of clients, they're just tired of having to move around, annually, a couple times. Their kids are moving schools. Now they're across town and longer to work. So the rent to own offers the stable, secure housing. That's where they know they're going to be for the next 5 to 10 years. They know what the price is going to be for the next 5 to 10 years. There's no increases. We don't increase year after year like other. But it's just offering that stability. Again, they get to pick the home. They can do additions. They can do updates to the home. You can't, I mean, you probably don't want to put too much money in the rental home because you're making it for your landlord. But if you do improvements on the home while you're in the rental home, that's just adding money, equity that you're able to make. And so there's a lot of benefits on the social side, if you want to think. If the prices stay the same, I mean, you're still there. It's still your home. Your price still the same. Sure, it hasn't gone up a ton. You haven't paid, but you still save money. You're not throwing it all away to the landlord. You're able to make that home, and you're going to be there for a long time, rather than the unknown of what your rent could be next year and are still going to be there. So that's kind of the clientele that we're finding now, is the ones that really just want to be secure and own the home.
What are most common reasons that clients don't succeed with the rent-to-own program?
Yeah. So it's not 100%. It's not even close to that. We probably have in the 90% success rate, though. It is high.
Oh, great.
We're there working with them. So the ones that don't, it's kind of their decision, I'd say. Like we've had a couple divorces, which is unfortunate, where neither want to stay in the home, which I understand, or neither one can by themselves afford it anymore. So it's like happens. We've had some people that had family illnesses, so had to go across country to take care of their loved ones. So they had to leave. We have had a couple deaths, unfortunately, but usually when it comes to the end of the term, they're either ready to buy out or they need to extend because they're home. We have had in the last couple of years, though, that they come to the end of their term and they just don't want to, and I think that's more of on a market anxiety. They were expecting that appreciation. Went back to our other questions and it wasn't there, and they didn't have the mindset or they never really wanted the home. They were kind of using it or working with it as more of an investment. And when it's not the investment, unfortunately, they can walk. So it is just an option to buy the home. And that's where we get stuck with it. I mean, that's one benefit to them, that if you own the home and the price went down, you might not be able to sell it. You might have to stay there more years to wait for that. Where with the rent-to-own, it gives them that flexibility. That's a negative on our side. But we've had a couple of those, and that's just, I think, due to the market and people's perceptions and, I don't know, due diligence is kind of changing. They're just giving it up and walking away, whereas before everyone would work hard. It's their home. They picked for it. They want an extension. So there's a change in clientele we found. So we're trying to find the right clients. Back to the other question, that really want to own the home. They're picking up the home. They want that stability. I know when we bought our home 15 years ago, I don't know what the rates were. Like, it wasn't a rate thing. It was just timing of our life. Like, now it's time to get a home. We bought it when the market was at the market, when the rates were at the rate, and we've been here ever since. So whether it went up and down the first 5 years, that wouldn't have affected us because our plan was to stay. So we're kind of looking for those clients that really want that home ownership thing. So we have had a couple of those over the last couple of years. Just trying to think of other. And then other ones, it's just things happen, right? We had a couple
life happens.
They lost their jobs. We were working with them a couple of years, but they couldn't find a job, or they couldn't, find one for similar income. So they just, most people. So it is on the higher rate. We've helped almost 300 families, but it's a numbers thing. It's bound to happen. Unfortunately, it's not for everybody. Just one option out there. Find the right clients. Not 100%. Market things in people's lives, and we're just here to help who we can and when.
Well, the one thing I'm looking forward to hearing here is your success stories. I'm sure you have lots, but is there any success stories that kind of stick out to you over the years you've been doing this?
Yeah, like that one I mentioned that he was able to buy out in 5 months was pretty amazing. Like that was his plan. We hear that a lot from people, like not to buy it out in there. You can see their profile, their credit, their down payment. If they know it's gonna be, 2 years. So that one kind of was not surprising, but almost half the people say they're going to buy it out earlier. No one ever does, right? So that was a one really like amazing for him. There's a couple other ones that stick out just because I don't know, connect. Like I have young kids, and when I started this, didn't have kids, so they've been through, every home, not every. They've been through a lot of home inspections, a lot of follow ups meetings, mortgage meetings, or they've been around this all. But when there's a couple there, we were able to go to the home inspection. They had their kids and my kids similar age. They were just running around the house out their bedrooms and playing with my kids. So we were just able to connect a little bit more. And then through the process, they would always bring up, how your kids are going and use their names. They actually wanted me to bring them by a couple times just so they could play and see it. And ones like that where you're really, really connected, and then to see them buy out, hit home a little bit more. So there's some people we have are very big of what we do. Like when we go by on our quarterly follow-ups just to say hi, they have baked goods there. They want to have lunch with you. Those ones there, they're just great. Nothing like crazy. Like a lot of people, no one's won the lottery, able to buy out early. Nothing like that crazy story. Waiting for that one still, where one of our clients, wins the lottery.
Yeah.
We had some Olympians, a gold medalist, one of our clients there, which is kind of cool to see all that stuff there. Like there's all sorts of people's jobs, incomes, where they're from, the background stories. We hear so many. They all are all different. Not one the same, very similar, but everyone has a little bit of different story. And it's just, there's nothing crazy, but it's just little ones that stick with you that you can just pitch them and you're just great. We just had one actually close yesterday.
Yeah.
They had a higher debt, but they had a lot of, so what we were able to do is put our personal money up maybe 2-3 months ago to pay off their debt, and knowing that when they could get the mortgage, we could factor that out or reimburse ourselves at that point in time. Without that, and they were just so grateful yesterday that we worked with them for the last almost a year to figure out solutions to get them the mortgage. But the one thing was holding back was this debt that they have to pay off. So being able to work with them, and now they want to do a huge success story and a sold sign out front and all these pictures. And
that's awesome.
Yeah, they go that extra mile and really are thankful. Are just the ones that stick with us.
So if people want to get a hold of you or JAAG, what is their best way to do that?
Probably the website. So if you go to JAAGproperties.com, there's a form there. You can just enter in your phone number, your contact, your income, like a pre-approval, and then we'll reach out. You can go to any of our social medias and connect with us that way. We have our phone number, email, info@JAAGproperties.com, 1-866-JAAG now. Anyway, will get to us the same way. So whatever here for them, call Jeff, and he's got our contact. He can forward it off too. Just kind of reach out. We're out there. Go on social media, Google and JAAG Properties. You'll be able to connect with us, but reach out however you feel is easiest.
Okay. Yeah, you're easy to find.
Yeah, it should be.
Well, Adam, at the end of all my podcasts, I do a feature on a small local business. Yeah. So this week I am doing it on Dark Matters Toys and Collectibles. I don't know if you're familiar with that shop.
Yeah, I lived around the corner going up in St. Thomas. So,
Oh, did you?
Yeah.
Yeah. So he's at 127 Ross Street in St. Thomas. And if you're looking for anything collectible, they've got it all there. My stepson, Adrian, goes there quite a bit, and Craig, the owner's fantastic. They've got everything from old school video games to album, Care Bears, wrestling, action figures, pretty much anything you want. So if you're into anything that's 80s, 90s, pop in and see the owner, Craig, at 127 Ross Street in St. Thomas.
Perfect.
Well, thanks. Yeah, thanks so much, Adam. I end every podcast the same way with "Let's get closing."
Yeah, exactly.
Thanks so much.
Thanks, Jeff.
Yeah, have a good day.